please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You've tuned into Business Saturday on CNBC TV18 and I am Nitya Balakrishnan. Let's get straight then to all the global market action overnight, and in the US markets, Wall Street ended higher, largely lifted by tech stocks. Amazon rose to an all-time high along with Facebook and Microsoft, letting the broad S&P index, the S&P 500, remember, posted its best close since February, ending 0.1% in the green, followed by the Dow that ended about 95 points higher. The Nasdaq, however, did end flat. Let's bring in CNBC's Josh Lipton, who gets us a wrap of all the action on Wall Street. Josh? Keeping it with the global markets, then let's take a quick look at how Europe performed. Markets closed slightly higher as investors digested fresh corporate earnings from out of the United States. Now, the French CAC ended about 0.4% higher, followed by the German DAX that ended 47 points in the green. The FTSE also ended about 11 points higher. Now, moving on to the currency space, the dollar dipped against a basket of currencies on Friday, fading from a two-week peak, which was tied to news of a record Chinese trade surplus that may fuel US-China trade tensions, and that briefly spurred safe haven bids for the greenback. The dollar's pullback likely stemmed from modest gains on Wall Street and a drop-off in trading volume before the weekend. Now, the Japanese yen rebounded from a 6-month low against the dollar. From currency onwards to commodities, then, oil prices reversed earlier losses but were set for a second straight week of decline. Prices rose about 1% intraday as strike actions in Norway and Iraq hit supplies. From the precious metal space, then, gold prices fell to 7-month lows as the US dollar rose. Demand for gold also waned on expectations of higher US interest rates. So good to have you right back here on Business Saturday. Now, India's trade deficit widened to $16.6 billion in June, hitting a 3.5-year high, while exports surged around 18% to $27.7 billion during the month. The imports figure came in much higher. This, of course, as costlier crude oil resulted in an over 21% jump in imports, pushing the figure to a whopping $44 billion. Now, moving on to some corporate development from the pharma space, it's indeed a setback for Dr. Reddys Laboratories after US District Court converts a temporary injunction against generic suboxone into a preliminary one. Ekta Batra is joining us on the phone line with all the details and what this really means for the company. Ekta, what really are you picking up on this development?
Hi, thanks for that. Well, you know, this was actually a piece of news that we were expecting for Dr. Reddys to come through, and now we understand that the U.S. court, which was expected to rule on suboxone by the end of the week, has decided that a temporary restraining order, which is basically not allowing Dr. Reddys to sell that particular suboxone drug in the U.S. market, has now, for a temporary period of time, has turned into a preliminary injunction. That means that Dr. Reddys cannot sell suboxone in the U.S. markets till there is a final decision on a pending litigation that it has with the innovator of this particular drug. So that means that the street that was anticipating Dr. Reddys to make around up to $80 million in the next 1 year from the product is now going to not happen, and hence you're going to see the stock probably on Monday adjust to the fact that these earnings are not going to be calculated anymore. So it is definitely a negative because the street was factoring in a possibility that Dr. Reddys would be launching this particular anti-drug addiction drug in the U.S. market. But now it seems as though that's not going to come through.
Well, Ekta Batra, do hold on, because it seems to be a very busy Saturday as far as the pharma space is concerned, because we also learned that Aurobindo Pharma has signed a definitive agreement to acquire Apotex's Europe business. Ekta, what are you picking up on that front?
Well, yes, important news which is coming for Aurobindo as well. It was, the company had guided that they are looking for acquisitions in the European space. That is basically one of their focus areas, and they have made acquisitions in the past within Europe. So, for example, they made an acquisition in Portugal just last year. And before that, they have acquired, businesses in Europe. But now what they have done is that they've acquired Apotex, which is a Canadian company, their generic business in multiple countries in Europe, such as Czech Republic, Spain, and a few more countries, Poland, etc. So that the entire acquisition is worth around 74 million euros. The entire product size, which is around 200 products plus, is, makes around 133 million euros in terms of sales. Currently, some of them are loss-making, so the company said that they will be turning it around. Overall, it should probably be, net okay by the street, considering that there's not too much stress on the balance sheet. But one will have to wait and see whether they go for bigger acquisitions, such as Mallinckrodt in the U.S., which is much spoken about. So after this acquisition, whether or not they go ahead with that is what the street would want to know more or focus on a little more.
Absolutely, and we'll have to wait for Monday to see how those stocks perform in trade. Ekta, thanks so much for joining in with those details. Keeping it in the corporate space then, tech major Infosys came out with its first quarter numbers, but unlike its peer TCS, which impressed on all major parameters, it was a mixed bag for the Bengaluru headquartered company. On one hand, while Infosys' constant currency growth at 2.3% disappointed the streets, its margins came in line with expectations. Net profit, however, missed street expectations. This, of course, on the back of one-off charge related to fair value reduction of Israeli software company Panaya, which Infosys, remember, is trying to dispose of. Kritika Saxena, who was crunching the numbers yesterday, is joining us with more details. Kritika, win some, lose some, it looks like, for Infosys in the first quarter at least?
Not a great start to FY19 for Infosys. Let's talk about the misses first. It's a miss on the top line and bottom line. So dollar revenue growth of about 0.9% and constant currency growth of 2.3% is a miss. Now, PAT has been impacted due to a 270 crore rupee reduction in fair value of Panaya. So that has been, that's an impairment charge that has been taken. Last time around, it was slightly lesser. So since it has been rebalanced, that entire math has changed. So PAT is actually down by about 2%. We were expecting an uptick over there. A couple of areas that have met our expectations, but some analysts were hoping for a beat. So margins at 23.7%, 100 basis point of a decline. It's near the high end of the guidance, but this time around we were hoping for them to be able to come at the 24% mark. Guidance for FY19 has been maintained at 6 to 8%. Operating margin guidance has also been maintained at 22 to 24%. So that's just about okay. Here are the positives. The deal win for this quarter has crossed $1 billion, and this is after 7 quarters. The company had kept that target in mind for quite some time, and about 40% of that is coming from financial services. So even though financial services is down by about 0.2%, the fact that 40% of their deal wins are coming from financial services reflect that perhaps in Q2, Q3, we may see an uptick in financial services. North America at 2% could have been better, but is better than what we were expecting. Retail has been sluggish for the company, but this time around they have seen a growth of 6%, manufacturing 2.5% of a growth at a time when they were seeing cuts. Now, digital revenues have come in at $803 million for the quarter, so that's up by about 8% sequentially and 25% on a year-on-year basis. So now the company is seeing 28% of the overall revenues coming from digital, so that's definitely a positive. But we need to see the kind of sequential and year-on-year growth that they are able to do over the next couple of quarters. Utilization is at an all-time high at 85.7%. It remains to be seen how much of this is maintainable. The management says that it should be maintainable in the near term, but there isn't any headroom to go further. Attrition, though, has gone higher with a couple of senior level exits. Attrition has gone from 16.6 to 20.6%, which is a bit of a negative, but the company says that they're working on levers to be able to arrest that. So by Q3, that should change.
I think our financial services business sees a very strong demand today. In dealing with the large deals, 40% of our large deals have come from financial services. Those naturally will transition into revenue generating businesses for us over the course of the next few quarters. In many of the areas, for example, in our core services, in digital, in specialized areas within financial services, we see good traction. We see good traction now again starting to come in the US marketplace within the banking and the insurance business. And especially in the insurance area, we see strong activity.
Well, the Infosys ADR fell almost 3% overnight after a muted performance from the tech major. Meanwhile, the Maharashtra government has kicked up a storm. The State Minister for Food Supplies has dealt a blow to cinema halls across the state. In the floor of the State Assembly, Minister Ravindra Chavan declared that there is no law prohibiting outside food inside multiplexes. The minister also said that multiplexes cannot sell food over the maximum retail price. He also went on to warn that multiplexes that prohibit outside food will face stern action from the government. Shares of PVR and Inox nosedived in trade soon after CNBC TV18 broke this crucial story. That's because, remember, both these multiplexes rely heavily on food and beverages for their revenue. For PVR, nearly 27% of its total revenues in FY17 was from food and beverages alone. And for Inox, it was about 23% of its revenues from food and beverages. Reactions, of course, have been pouring in over this move by the Maharashtra government. And let's listen in to some of them, starting, of course, with the nodal state minister, Ravindra Chavan.
1966 नियम के अंदर 121 के अंदर एकदम स्पष्ट ऐसा कहा गया है कि ऐसी कौन सी भी तरह की खाने की चीजें या पानी लेके जाने के लिए कोई भी जो मालिक है वहाँ का चित्रपट गृह का वो मनाही नहीं कर सकता, ये स्पष्ट कहा गया है। तो इस वजह से अगर कोई उसके लिए रोक लगाता है तो वो गलत है और ऐसा करना गलत है। ऐसे निर्देश हमने आज बता दिए हैं। वहाँ की सुरक्षा जांच जो है वो जांच ठीक तरीके से करनी चाहिए, उसमें कोई भी दिक्कत नहीं है। लेकिन ऐसी कोई खाने वाली चीज हो या पीने का पानी हो, इसके लिए हम वहां पर लेके जाने के लिए कौन सी भी तरह की आप उनको मनाही नहीं कर सकते, ऐसा उनको कहा है।
Right to eat food is your basic right to survival. If you feel hungry, you have to eat food. The dominant purpose when you go to a restaurant, the dominant purpose of the legal relationship is to eat food. But when you go to a cinema hall, the prime objective and the dominant purpose of the contract is to watch a movie.
I too believe that the price for water, for popcorn is exorbitant and multiplexes should reduce that. But I believe that the way to go about doing that is perhaps users of PVR, for example, or users of Inox should put pressure on the establishment, should go to social media, should vent their frustration and force the management to reconsider their price decisions and reduce their prices. I am concerned, and I go back to the days of 2014 when Narendra Modi told the country and told the business community that he believes in minimum government, maximum governance. I believe that we are entering an era of maximum government and minimum governance.
Shifting gears then to some crucial international headlines, former Pakistan Prime Minister Nawaz Sharif and his daughter Maryam Nawaz Sharif were arrested late last night, immediately after they landed in Lahore. While Sharif faces 10 years in jail after being convicted in a corruption case, his daughter Maryam faces a 7-year jail term. Let's bring in CNN News 18's Maha Siddiqui, who's joining us on the phone line with the latest developments in this case and the impact of the same. Maha, thanks for joining in. And what really will this mean for the poll-red Pakistan currently?
Well, as you know, that this is the time which is just about 2 weeks away from the elections in Pakistan. Elections are going to be held on the 25th of July. Nawaz Sharif, while he was in London attending to his wife there, who is in coma, has already alleged that his candidates are being threatened by the ISI. They are being asked to withdraw their nominations. They are being asked to withdraw their candidature. There has been a spate of desertions also that his party, the PMLN, has seen, with at least 7 of their candidates now fighting as independents from the Punjab province, which was believed to be the stronghold of the PMLN. So for the political survival, and as you know, Nawaz Sharif has already been banned from contesting elections for a lifetime because he was not found sadiq and ameen, which is virtuous and honest according to their laws. So at the moment, what we are seeing is this fight by Nawaz Sharif and his daughter, who's seen as his political heir, Maryam Nawaz Sharif, they have projected themselves as political martyrs by coming back to Pakistan and not resisting this arrest. At the moment, they are lodged in the Adiala jail in Rawalpindi. They are being categorized as they are being given B category facilities, which means that it will be in direct linked to their social and educational status. But this is clearly a fight that they are fighting out and brazening it out really in Pakistan for the very survival of the Sharif family politically and their party.